Welcome to Deals 2019, a look back at some of the key transactions which stole the headlines and shaped the markets over the last 12 months. We kick off with a look at a 36 billion shillings takeover, whose announcement sent the markets into a sugar high, with the share price of the then listed KenolKobil surging by as much as 29% in just one day. But no sooner had investors warmed up to this development than the market regulator raised the red flag. There was a skunk at the garden party. Let's take a look at the web of insider trading which shaped the takeover of KenolKobil. The following correspondence took place on WhatsApp on October 13th, 2018 between 6:33 p.m. and 6:52 p.m.
I have actionable intelligence on a share at the Nairobi Securities Exchange. Please advise if this is something you want to look at. It's a buyout. I can open an account for you at Kestrel for 50-50 split of the profits.
What ticket and what sort of pop-up do you expect?
Ticket is up to you. I'm expecting a 50% pop. You cannot talk to anyone about this.
There are two key phrases in the WhatsApp messages which came from the trader. The first is actionable information, which is any piece of information which an investor would deem important in deciding whether to buy, hold or sell a security, and mostly the share of a company. The second statement is, you cannot talk to anyone about this. This was important because the functioning of the market is premised on the assumption of efficiency and symmetry in dissemination of material information. The illegality of insider trading is the act of executing a trade based on privileged access to material information. The morning of Wednesday, 24th October 2018 was rather chilly in the streets of Nairobi. Just before the market opened at 9 a.m., news began filtering that a major deal was in the offing. French firm Rubis Energie made public its bid to acquire KenolKobil, one of the two oil marketers that were listed at the Nairobi Securities Exchange. Rubis Energie offered to buy out 1.2 million ordinary shares of KenolKobil at 23 shillings, 53.4% higher than the share had averaged in the 30 days of trading which preceded the announcement. At the very least, it was a sweetheart deal which investors in the bear market would only be too happy to jostle for. For market watchers, the premium Rubis Energie offered the takeover of KenolKobil did not come as a surprise. The deal was coming on the back of two attempted takeovers which had flopped miserably in other companies. Just 3 months earlier, the bid by US-based firm Seaboard Corporation to take over Unga Group fell flat as minority shareholders blocked its bid to lock in at least 75% of the company's shares. In similar fashion, the takeover bid of Express Kenya drew a blank in July 2018. By the time trading closed at the Nairobi Securities Exchange on the day of announcement, the KenolKobil share wound up at 19 shillings and 80 cents, posting a 29.4% surge in price compared to the day before in just one day. Shareholders of KenolKobil had seen their paper wealth gain by 6.6 billion shillings as investors warmed up to the news of the takeover. It was Christmas come early, but the market regulator was soon to reveal there was the proverbial skunk at the garden party. In the late afternoon of October 24th, 2018, the Capital Markets Authority would dispatch a statement to newsrooms indicating it had initiated investigations into what it termed as suspicious trades in relation to the takeover of KenolKobil. The statement read, and I quote, "Through its market surveillance, the authority identified potentially irregular trading of the KenolKobil counter in the run-up to the issue of the notice of intention by Rubis Energie. Consequently, in connection with these investigations, the authority has instructed the Central Depository and Settlement Corporation to place a freeze on the suspected accounts." By the time the CMA had concluded the first and second phases of investigations in early June 2019, it had resolved to initiate enforcement proceedings against Kestrel Capital chairperson and founder, Mr. Charles Phil Marsham, Kestrel Capital Chief Executive Director, Mr. Andre Desimon, and the stockbroking agents, Ali Kansachu and Mr. KenolKobil. An affidavit tabled in court by Capital Markets Authority would reveal that between October 15th and 23rd, 2018, Kestrel Capital stockbroking agent Ali Kansachu purchased 56,804,600 shares of KenolKobil at an average price of 14 shillings and 23 cents. It is important to circle back to where all this started. A WhatsApp message sent by a trader on October 13, 2018 at 6:33 p.m., just 2 days before these purchases amounting to 850.6 million shillings worth of KenolKobil shares were initiated. Kunal, at the time another stockbroking agent of Kestrel Capital, purchased 2.5 million shares of KenolKobil at an average price of 14 shillings and 40 cents between October 15th and 23rd, 2018. In the month to October 23rd, 2018, Kestrel Capital directly purchased 5,239,000 shares of KenolKobil at an average price of 14 shillings and 88 cents. It is these transactions that would come under the spotlight of the CMA Act of 2018, which deals with insider trading. Article 32B of the Act provides that a person dealing in listed securities or their derivatives which are price affected commits an offense of insider trading if 1. They encourage another person, whether or not that other person knows it, to deal in the securities or their derivatives which are price affected securities in relation to the information in the possession of the insider, knowing or having reasonable cause to believe that the trading would take place. Second, discloses the information otherwise than in the proper performance of the functions of his employment, office or profession to another person. According to Article 32C of the Capital Markets Authority Act of 2018, information relating to a security qualifies to be insider information if 1. It relates to the particular securities or to a particular issuer of securities, 2. It has not been made public, and 3. When made public, it is likely to have material impact on the price of the security. Insider trading creates information inefficiency, grants a few market players undue advantage, and on the whole undermines the one currency on which every market operates, and that's confidence. So bad is insider trading that it necessitated an amendment to the Capital Markets Authority Act of 2013 to create a more robust surveillance system. In the budget speech of June 2013, the then Treasury Cabinet Secretary Henry Rotich drew attention of the House to the subject of insider trading and how it was undermining the capital markets. Henry Rotich read, and I quote, "Honorable members, insider trading and market manipulation continue to pose a threat to the stability and growth of the capital market. To address these challenges and safeguard the integrity of our capital market, I propose to amend the Capital Markets Act to redefine the offense of insider trading as an offense of strict liability, and further propose to specifically identify a range of the most common market manipulation offenses to guide the courts and the investing public on the nature of these offenses." It is against this backdrop that a law was passed in December 2013, giving the market regulator, the CMA, greater powers in combating insider trading. Under the new law, directors or individuals found to have traded on insider information would face up to 2 million shillings or 2 years jail term, while firms would face up to 5 million shillings for the same offense.
With regard to the legal framework and the legal provisions around insider trading and market manipulations and other kinds of misfeasance, Kenya has actually one of the most robust frameworks in the world in that sense. But the enforceability of those legal provisions is a function that is not wholly within the control of the authority. That we can follow natural justice, ensure full compliance with the Constitution, but even having concluded that process, you can have the full enforceability of that action being postponed for 5 or 6 years because of court intervention.
On July 8, 2019, the CMA took enforcement action on persons found to have traded on KenolKobil shares on the basis of insider information. The authority's ad hoc committee had established that Mr. Andre De Simon disclosed price-sensitive material and public information on the KenolKobil transaction to the two identified stockbroking agents, Mr. Ali Kansachu and Mr. Kunal. The two agents thereafter used the insider information to deal in the price-affected shares by advising and or buying on behalf of their various clients, approximately 59 million KenolKobil shares in the week before the takeover announcement was made on the 24th of October 2018, contrary to the provisions of Section 32B of the Capital Markets Act. Andre De Simon faced a financial penalty of 2.5 million shillings and was further disqualified from holding office as a key officer of a publicly listed company and or issuer, licensee, or in any other capacity in an approved institution of CMA for a period of 1 year from the date of the enforcement notification. For Ali Kansachu, the CMA recovered 4,692,497 shillings and 50 cents, being the amount he received as commissions from the respective trades conducted on the basis of insider information. Sanchu was also disqualified from holding office as a key officer of a publicly listed company and or issuer, licensee, or in any other capacity in an approved institution of CMA, including a stockbroking agent, for a period of 3 years from the date of the enforcement action. For Kunal Bid, the CMA recovered 23,413,700 shillings, being gains earned by the trading accounts he managed. CMA further recovered 333,747 shillings, being the amount received by Bid Securities Limited from Kestrel Capital East Africa Limited, and 14,569,000 shillings and 50 cents, being the amount received by Bid Management Consultancy Limited from AIB Capital as commissions from the respective trades conducted on the basis of insider information. Kestrel Capital voluntarily disgorged 9,863,767 shillings and 10 cents to the CMA, being the commissions earned on the transactions executed through Kunal Bid and Ali Kansachu. Kestrel voluntarily entered the settlement, neither admitting nor denying liability, thereby closing the insider trading investigations in respect to Kestrel as an entity. Looking at the final enforcement action taken, and many would argue it felt a little like a slap on the wrist in terms of someone could have raked in so much money. But when it comes to enforcement, it is suspension for 1 year from holding a public office, and the amount of money which they could have realized has been disgorged. Do you feel the measures were tight enough?
Our approach to enforcement sanctions, one, we have to look at the scope of sanctions that are within our powers administratively, and then also find the right balance between what we can do internally and what we need to put out to, for example, the Director of Public Prosecutions or other external entities. And those are some of the factors the board has to weigh. But I think you'd be hard-pressed to find how many regulatory agencies in this country have recovered in excess of 1.3 billion shillings in fines and sanctions and surrenders.
Before the CMA's disciplinary committee, Andre De Simon admitted having divulged price-sensitive information regarding the takeover way before the deal was made public, thereby having granted the two agents privileged access to information. It is this revelation which tightened the noose on the two agents. Ali Kansachu, on his part, filed an appeal at the High Court challenging the enforcement action taken against him. Among other considerations, Sanchu argued that he had been conducting interviews on the KenolKobil share from as far back as October 2017, and his purchases were informed by the belief that the share price promised an upside based on fundamental analysis. It is this petition that would throw the enforcement action taken by the Capital Markets Authority into headwinds. In early December 2019, the High Court tabled its judgment on the application 220 of 2019, Ali Kansachu versus the Capital Markets Authority. In its pronouncement, the High Court ruled that the enforcement action taken by the CMA against Ali Kansachu was tainted by bias owing to the presence of 4 of CMA's directors within the ad hoc committee. As a result, the High Court set aside the action that had been taken by the Capital Markets Authority. The CMA has since appealed this decision. Until now, Kunal Bid has not challenged the enforcement action. KenolKobil delisted from the Nairobi Securities Exchange on August 23, 2019, following successful acquisition by Rubis Energie. It was the end of the road for the company's 6 decades-long listing at the exchange, having gone public in September 1959. The takeover transaction will, however, offer enduring lessons on the subjects of material information, market manipulation, and surveillance by the watchdog. Julian's Amboko, NTV.